Hello everyone, welcome back to my YouTube channel. Today we are discussing the latest developments surrounding the Vietnamese Dong, the growing speculation about a possible revaluation, and the newest exchange rate conversations that are creating excitement among global currency watchers and investors. Over the past several weeks, discussions about the Vietnamese economy, foreign investment growth, manufacturing expansion, and international trade partnerships have once again pushed the Vietnamese Dong into the spotlight. Many investors are now asking whether Vietnam's rapidly growing economy could eventually support a stronger currency value in the future. In today's report, we will break down the latest financial discussions, economic trends, banking updates, and international market reactions connected to the Vietnamese Dong and its exchange rate outlook for 2026. The Vietnamese economy has continued to attract worldwide attention because of its strong export sector, rising foreign direct investment, and expanding role in global manufacturing. Major international companies have been increasing their operations inside Vietnam, especially in electronics, textiles, technology, and industrial production. This growing economic activity has strengthened confidence in Vietnam's long-term economic future, and many analysts believe the country could continue becoming one of Asia's fastest-growing economies over the next several years. In recent months, international investors have closely monitored statements from Vietnamese financial institutions and central banking officials. Although there has been no official confirmation of any sudden currency revaluation, speculation continues to spread across online communities, investor forums, and financial discussion platforms. Supporters of the revaluation theory believe Vietnam's growing economic strength may eventually support a higher valuation for the Vietnamese Dong compared to previous years. However, financial experts continue to remind investors that currency adjustments are usually gradual and carefully managed by central banks rather than sudden, overnight changes. Vietnam's export industry remains one of the biggest reasons why the country continues to receive positive international attention. The nation has become a major manufacturing center for electronics, smartphones, computer components, footwear, and consumer goods. Global supply chain shifts have encouraged many international companies to diversify operations into Vietnam, increasing production activity across the country. This has created more jobs, improved infrastructure investment, and increased international confidence in Vietnam's long-term economic strategy. Another major factor driving optimism surrounding the Vietnamese Dong is Vietnam's trade relationship with large international economies, including the United States, China, Japan, South Korea, and members of the European Union. Trade agreements and investment partnerships have continued strengthening Vietnam's role in global commerce. Financial analysts say that a strong export economy can support currency stability over time, although exchange rate management still depends on many other important economic factors including inflation, foreign reserves, debt management, and monetary policy decisions. Over the past year, Vietnam has also seen continued growth in tourism recovery, following previous global economic slowdowns. International tourism has slowly returned to major Vietnamese cities and coastal destinations, helping support local businesses, hotels, transportation services, and retail sectors. Tourism revenue plays an important role in supporting foreign currency inflows into the Vietnamese economy. Increased tourism activity can strengthen economic confidence and support broader financial stability. At the same time, banking experts continue emphasizing that the Vietnamese government traditionally manages the dong carefully in order to maintain export competitiveness. A currency that rises too quickly in value can sometimes reduce export advantages because Vietnamese products may become more expensive in international markets. For this reason, analysts believe any long-term strengthening of the dong would likely happen gradually and strategically rather than through sudden, dramatic changes. Social media discussions regarding the Vietnamese Dong have exploded in recent weeks, especially among retail investors and international currency followers. Many YouTube creators, financial bloggers, and online commentators have been discussing rumors about future exchange rate possibilities. Some supporters believe Vietnam's economic growth trajectory could eventually support a stronger regional currency position. Others caution that speculative rumors often move faster than official economic policy decisions. Several international economic reports have highlighted Vietnam as one of Southeast Asia's strongest emerging economies. Economic growth projections remain relatively positive compared to several neighboring countries. Manufacturing output, technology investment, and infrastructure expansion continue to attract foreign companies looking for stable production environments outside traditional manufacturing hubs. These developments have increased international interest in Vietnam's long-term economic future. One important issue frequently discussed by analysts is Vietnam's foreign currency reserve position. Strong reserves can provide central banks with more flexibility in managing exchange rate stability and economic policy adjustments. Financial institutions often examine reserve levels, inflation trends, and trade balances when evaluating the strength of a nation's currency outlook. Vietnam's improving economic indicators have contributed to optimism among some investors, although experts continue advising caution against unrealistic expectations. International financial markets have also been closely monitoring the relationship between the US dollar and emerging Asian currencies. The strength of the US dollar often impacts developing market currencies, including the Vietnamese Dong. When the dollar strengthens globally, many emerging market currencies may face additional pressure. On the other hand, periods of dollar weakness can sometimes create more favorable conditions for emerging market currency stability. Another topic receiving major attention is the role of technology and digital transformation within Vietnam's economy. Vietnam has rapidly expanded its technology sector, attracting investment from global technology companies and manufacturing firms. Young skilled workers, competitive labor costs, and government support for digital development have positioned Vietnam as a growing technology hub in Southeast Asia. This economic modernization is one reason some investors remain optimistic about the country's long-term financial outlook. Meanwhile, financial analysts continue warning investors to separate speculation from verified policy announcements. There is currently no official statement confirming a major overnight revaluation of the Vietnamese Dong. Central banks typically avoid sudden, unpredictable currency movements because they can create instability in trade markets, banking systems, and investor confidence. Most currency adjustments occur through gradual policy management over extended periods. Vietnam's real estate sector has also shown signs of recovery in several regions. After previous economic slowdowns, infrastructure projects, transportation improvements, and urban development programs have continued attracting domestic and international investment. Strong infrastructure development often contributes to broader economic confidence because it supports long-term industrial growth and commercial expansion. Some economists believe Vietnam's demographic advantages may continue supporting economic expansion for many years. A relatively young workforce, growing middle class, and expanding consumer market provide strong foundations for future development. Rising incomes and increased domestic consumption can help diversify economic growth beyond exports alone. This combination of export strength and domestic market growth creates positive long-term economic potential. Investors following the Vietnamese Dong should also understand that currency valuation depends on multiple interconnected economic indicators. Inflation control remains critically important. If inflation rises too rapidly, it can weaken purchasing power and reduce currency stability. Vietnam's financial authorities have worked to balance economic growth with inflation management in order to maintain broader financial stability. Another area receiving increased attention is Vietnam's relationship with international financial institutions and global investment organizations. International credit ratings, investor confidence, and banking reforms can all influence how global markets view a country's currency outlook. Positive economic reforms and stable governance often improve investor sentiment over time. Across global online communities, speculation regarding possible future exchange rates for the Vietnamese Dong continues growing. Some supporters predict substantial future appreciation if Vietnam maintains strong economic growth for the next decade. Others believe the currency will likely remain carefully managed within controlled ranges to protect export competitiveness. Financial experts repeatedly remind investors that predicting exact future exchange rates is extremely difficult because markets are influenced by unpredictable global economic conditions. Vietnam's manufacturing sector remains a key engine behind economic expansion. Factories producing electronics, automotive components, textiles, and consumer products continue expanding operations. International corporations increasingly view Vietnam as a reliable production center due to favorable business conditions and strategic geographic location. This industrial growth has supported employment opportunities and increased export revenues across the country. In addition to manufacturing, Vietnam's agricultural sector continues contributing significantly to the economy. Vietnam remains one of the world's important exporters of rice, coffee, seafood, and agricultural products. Agricultural exports help generate valuable foreign currencies earnings and support rural economic development throughout the country. Energy development projects have also become an important topic within Vietnam's economic planning strategy. Investments in renewable energy, power infrastructure, and industrial energy systems aim to support long-term economic growth and rising industrial demand. Stable energy infrastructure is essential for maintaining manufacturing competitiveness and attracting additional foreign investment. Many financial observers compare Vietnam's economic rise to earlier development patterns seen in other Asian economies that experienced rapid industrial growth over previous decades. While every country follows its own economic path, Vietnam's combination of export growth, foreign investment, and industrial expansion has created strong international interest. Currency traders and investors continue watching regional geopolitical developments as well. International trade tensions, shipping disruptions, commodity prices, and global inflation trends can all impact emerging market currencies. Vietnam's economic stability partly depends on maintaining balanced trade relationships and managing external economic risks carefully. Several recent banking reports have suggested that Vietnam's financial sector continues modernizing through digital banking expansion, financial technology growth, and regulatory improvements. Stronger banking systems can improve investor confidence and support long-term economic stability. Financial modernization also helps attract international capital and investment partnerships. Meanwhile, supporters of Vietnamese Dong appreciation theories point to rising economic output and expanding foreign investment as reasons for optimism. They argue that stronger economic performance could eventually justify gradual currency strengthening over time. However, mainstream economists emphasize that central banks prioritize stability and sustainable growth over dramatic currency movements. The Vietnamese government has repeatedly focused on long-term development strategies, including infrastructure expansion, export diversification, education improvements, and technology investment. These policies aim to strengthen Vietnam's global competitiveness while supporting sustainable economic growth. Long-term structural improvements often matter more than short-term speculation when evaluating a nation's financial future. Global investors also continue analyzing Vietnam's stock market performance and capital inflows. Strong investment activity can signal international confidence in future economic growth. However, Emerging markets can also experience volatility due to changing global financial conditions, interest rate shifts, and investor sentiment. One of the most important issues for currency stability is maintaining confidence in economic institutions. Stable policy frameworks, predictable regulations, and transparent financial management help strengthen investor trust. Vietnam's continued integration into global trade networks has increased international exposure while also creating new economic opportunities. At the same time, analysts caution viewers against believing exaggerated online rumors, promising unrealistic overnight wealth from sudden currency revaluations. Currency markets are highly complex, and major financial changes typically happen gradually over time. Responsible investing requires careful research, risk awareness, and realistic expectations. International tourism growth could remain another positive factor for Vietnam moving forward. Coastal tourism destinations, cultural attractions, and major urban centers continue attracting visitors from around the world. Tourism revenues help support local businesses while increasing foreign currency inflows into the economy. Technology manufacturing continues expanding rapidly across Vietnam, especially in electronics assembly and semiconductor-related industries. Global companies increasingly view Vietnam as an important part of future supply chain diversification strategies. This industrial growth could support employment expansion and long-term economic modernization. Another topic gaining attention is Vietnam's increasing participation in regional economic partnerships and international trade agreements. Broader market access can strengthen export opportunities and attract additional foreign investment. Trade integration often plays an important role in supporting economic development for emerging economies. Financial institutions around the world continue monitoring inflation conditions, energy prices, and global economic growth forecasts. These broader international factors influence emerging market currencies, including the Vietnamese Dong. Even countries with strong domestic growth can face challenges during periods of global financial instability. Many Vietnamese citizens and international investors remain optimistic about the country's future because of visible infrastructure improvements, rising industrial capacity, and expanding urban development. Economic transformation over the past 2 decades has significantly changed Vietnam's international economic position. Banking experts also note that exchange rate policies often reflect broader national economic goals. Governments may prioritize export competitiveness, inflation control, employment stability, or investment growth, depending on current economic conditions. Currency management, therefore, involves balancing multiple competing priorities rather than focusing only on exchange rate strength. Speculation regarding future Vietnamese Dong valuation may continue throughout 2026 as economic growth stories remain in the global spotlight. However, financial professionals consistently recommend focusing on verified economic data and official policy announcements rather than relying solely on rumors circulating online. Vietnam's education sector and workforce development programs have also contributed to economic growth potential. Skilled labor availability attracts international manufacturers and technology companies seeking efficient production environments. Human capital development remains essential for sustaining long-term industrial competitiveness. Another important factor is transportation infrastructure. Ports, highways, industrial zones, and logistics systems continue expanding across Vietnam to support export growth and international trade efficiency. Modern infrastructure improves supply chain performance and enhances economic productivity. Several analysts believe Vietnam could continue benefiting from shifts in global manufacturing strategies as companies diversify operations across multiple countries. This trend has already increased foreign investment into Vietnamese industrial regions and may continue supporting economic expansion over the coming years. Financial observers are also paying attention to Vietnam's environmental and sustainability initiatives. Renewable energy investments and green development projects are increasingly important for attracting international investors focused on sustainable economic growth. Modern energy systems and environmental policies can strengthen long-term competitiveness. At the same time, global market volatility remains a major consideration. Currency values can fluctuate due to unexpected international events, geopolitical tensions, commodity price movements, or global recession fears. Investors following the Vietnamese Dong should remain aware of these broader market risks. Economic experts continue describing Vietnam as one of Southeast Asia's most closely watched emerging economies. Strong manufacturing growth, rising exports, expanding foreign investment, and increasing global integration have all contributed to positive long-term expectations. Online discussions about possible Vietnamese Dong revaluation scenarios are likely to continue attracting major attention across YouTube, social media platforms, and investor communities. However, viewers should remember that speculation does not equal official policy confirmation. Responsible financial analysis requires separating optimism from verified economic announcements. Vietnam's long-term development strategy appears focused on maintaining stable economic growth while increasing global competitiveness. Infrastructure expansion, technology investment, manufacturing growth, and international trade integration remain central pillars of the country's economic vision. As global investors continue searching for emerging market opportunities, Vietnam's growing economy will likely remain an important subject of international financial discussion. Whether or not the Vietnamese Dong experiences significant future appreciation, the country's economic transformation has already attracted worldwide attention. For now, financial analysts expect Vietnam's central banking authorities to continue carefully managing monetary policy in order to balance growth, inflation, exports, and financial stability. Any major exchange rate changes would likely occur gradually over time, rather than through sudden overnight actions. The coming months could provide additional insight into Vietnam's economic momentum, investment trends, export performance, and banking developments. Investors around the world will continue monitoring official reports, economic indicators, and policy announcements for further clues regarding the future direction of the Vietnamese Dong. Thank you everyone for watching today's latest Vietnamese Dong update and economic analysis report. Make sure to stay informed through official financial news sources and continue following global market developments carefully. If new banking announcements, exchange rate updates, or economic policy changes emerge regarding the Vietnamese Dong, we will continue covering them here on the channel. Stay safe, stay informed, and we will see you in the next update.